Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to look through many charts which seem to indicate the early signs for the end of this bear market. While we can't say that this bear market has come to an end, and we'll have to wait until the confirmation of that once we flip above the 25,200 level. However, there are many signs now in the charts which seem to be pointing in that same direction that this bear market has ended. I'll also have a look at the 60-day cycle to tell us exactly in the shorter term where this price is heading and whether we're going to meet our next target up here. And if that sounds interesting, then you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so we're going to start off on the weekly chart, and we're going to have a look at what it says in the title, i.e. the mother of all golden crosses. Now, we all have come across the death cross and the golden cross on the 50 and the 200 on the daily chart. However, one cross that nobody seems to ever look at, and this is one I'm going to call the mother of all golden crosses, because in the last 12 years, it's predicted the beginning of the next bull market. And here it is. So the blue line here is the 8 EMA, the yellow line is the 21 EMA, and the white line is the 34 EMA. And as you can see, over here, the 8 EMA is about to cross over the yellow 21 EMA here. So the question is, why is this very important? Well, once this crosses over, which will be next week, unless we have a massive fall in the price here. But if you look historically at this cross, if we just move backwards, you'll see that once we crossed over here, the blue line over the yellow line, we never crossed back over until just now. But if you look further back, at the beginning of the previous cycle in 2019, and once again at the end of that bull market at 20,000, the cross that came over here, also between the 8 EMA and the 21 EMA, you can see it never crossed over again until this big Marubozu candle over here. And that marked the end of this bear market here. Blue line crossed over after this Marubozu candle here. And once that happened, you can see that the 8 EMA was just used as a support line all the way up to the top of that minor bull market that we had up to the 14,000. And similarly, just after the COVID situation, we got exactly the same thing happening. Once we crossed over here, again, this was the marker for the beginning of the next rally, because once that happens, i.e. the 8 EMA goes above the 21 EMA, that's where the magic happens here. And that was used as a support all the way up to the 64,000. And if you go right back to the beginning, look how important and relevant this 8 EMA, the blue line, is. Right from the beginning, it's been used as a support all along over here. Look at that. All the way right up to the top over here in 2011. And when we did come back down from this top, the blue crossed down below the 21 EMA. So this was the marker for the end of this bull market up to that point. And then once it crossed back over again at this point, that was the marker for the end of this bear market down here. Yes, we can see that it chopped and changed over here, but the market never came back to the previous lows. This is very important. And then when it did actually break out above that over here, then look at what happened. It just used that all the way up to the next top over here. And this was a minor top, just like the 14,000 that we had in 2019. And this again carried on and finding support on the 8 EMA until the end of that first cycle at the end of 2013. You can see very clearly the blue line, the 8 EMA, has provided incredible support all the way along over the last 12 years. And if we move further on, we had this bear market for another year. It culminated in this low over here. But once we got out of this bear market, once we crossed over once again, the 8 EMA over the 21, we never came back to the previous low. And that was a marker that the bottom was in. Yes, we had a similar type of a COVID situation down here where it crossed back over. But once it crossed back over again, over here, look what happened. that was the start of the next bull market, all the way riding the 80 MA all the way up to the 20,000 over here. So as you can see quite clearly from the historical context that I've given you, that once we cross over here, we don't go back to the previous low, and it's a marker, a very strong signal that the bottom is in. And obviously we know that there are no guarantees or certainties in any stock market or crypto market, and we're talking about probabilities and possibilities, and judging by the context I've just shown you, there is a very high degree of probability that this bottom is in, and that once we cross over next week, then the 80 EMA will be ridden all the way up to the next bull market over the next 3 years. And you can use that as a marker that very rarely does it ever break down below the 80 EMA along the way. Okay, I'm going to move on to the monthly chart over here and have a look at the bigger picture, because it's extremely important and relevant to get the overall bigger picture of what's happening and what could possibly happen now we are where we are by looking at the signs historically. So going back to this point here in the RSI, as you can see, the blue line here, the blue dotted line is the 50 on the RSI chart here. And when we dip below this, as you can see here, and we come out back up, that seems to mark here the beginning of this big bull market over here. The next time we go below this point here and come out over here, seem to be the same exact points where we were at the bottom of this bear market at the end of 2013, where we topped out here. And what we have to do is wait for the turn back up towards the 50 here. And once again, as you can see, that marked the beginning of the bull market over here. If we move this a little bit left, you can see what's happened here. And this culminated in the 20,000 top that we got. Then at the end of that bear market down here, that seemed to correspond with, again, the RSI falling below the 50. And once we came back up above that 50, that was the sign that we got to go back up to the next bull cycle. And if we move left to that, we can see clearly that once we came out of that, if we ignore this COVID situation, that was the start of this big bull market back up to the 64,000 and 69,000 over here. And currently, you can see quite clearly where we are. And if history repeats itself, we've come to the bottom of this bear market, we've fallen through the 50, we've flattened out over here, and currently we're aiming towards getting to the top of that 50 and breaking through. So we haven't done that yet, but you know what's going to happen if the history repeats itself. And we've just got this big green candle breakout over here, which is telling us something, and it's for everybody to interpret that as they wish. I want to move quickly onto the daily chart and have a look at something that we haven't had a look at for quite a while, and that is the Pi cycle chart. And as you can see, back in 2018, when we topped out at 20,000, we fell below this red line here. The red line is the 111 simple daily moving average. And you can see quite clearly it became resistance along the way in that bear market. And when we fell below it properly here, then when we came back up above this line, that was the mark of the end of that bear market from this indicator's point of view. And look what happened afterwards. And if you look over here, the current cycle, once we fell below it there, again, we became resistant at these points along the way. And now have a look where we are. Does that tell you something of what's about to happen over here? You can see quite clearly that once we moved out of that red line, the 111 simple daily moving average, that was the last time we went below it until the end of the next bull market, until we got at least a big run up. And this was where the run up was, to the green line, which is the 350 simple daily moving average. And guess where that is? It's downward sloping. So you know that when it hits that, that's where we're probably going to top out, and it could be around here. And this actually plays into our narrative that in this next run up that we have, we're probably going to top out between 50 and about $40,000 mark here. So just keep an eye on this. It's the charts that most people aren't looking at the moment. When it goes to those points, that's when they'll look at it. But we want to be ahead of the game here. And you can see quite clearly we've crossed over the red line, just like over here. And it also tells us that once you get past the red line at the end of the bear market over here, once you get past the red line, back above it, then just like previously, you don't come back to that level again. Obviously, the COVID situation brought it back very close to that, but what are the chances that we're going to have a COVID situation? Maybe the FTX was the COVID situation, it just happened a bit earlier. Who knows? We can only look at charts and look at what's happened in the past to ascertain what could possibly and probably happen in the future. Before I move on to the 60-day cycle, I just want to bring something to your attention which is going to impact the markets. And that is that the Fed will be meeting to decide on the interest rate hike between the 31st and the 1st of February. And they will decide on the interest rates on the 1st of February next Wednesday. So you'll see quite a lot of volatility. And most people are expecting a 0.25%, i.e. a 25 basis points increase on the 1st of February next Wednesday. And if it comes in at 50 basis points, then you could see a big fall in the market. So there will be a lot of volatility depending on what the Fed decides on that day. So let's wait and see what happens, but we must keep this date in mind. Next Wednesday, you'll see a lot of volatility, and depending on how the market reacts, the market will obviously go up and down according to that. Okay, if you've been following me on Twitter, you'll know that I've been mentioning quite a lot of things regarding the 60-day cycle and the wider aspects of the charts. So yesterday we got a breakout up to about 23,800, and it looked like it was going to go up to our target over here of about 25,200. But I did mention that there was actually this divergence on the RSI, which I'll go through in a minute. But if you want to catch me on Twitter in between my videos, then you can do so by looking at these types of charts that I do post on here. And I mentioned quite a lot of very important information. And I've noticed that a lot of people are discussing my charts in the Twitter when I post them. And I mentioned this mother of all golden crosses over here just yesterday when I was noticing this. And also this 8 EMA that we seem to be riding, which obviously gives us the indication that so far we are still in this big bull rally that we've got since 15,400. So if you want to follow me on Twitter, then all you have to do is click on the Twitter link underneath all of my videos. Okay, coming back to the 60-day cycle, as you can see, we are getting a divergence over here compared to the price going higher and the RSI going lower here. Now, that doesn't mean that the price can't go higher. It'll just mean that the RSI goes a little bit further up. And when the price turns back down, this will turn back down again, and the divergence will have been then starting to play out. So here we are, having started the new cycle after 51 days of the previous cycle. And currently we are on day 27 here. And as we know, the midpoint of this cycle from this red line to this red line, we're assuming that this is going to be 60 days until obviously it happens. So what we're waiting for is a resolution of exactly what's going to happen at this resistant point that we've got to. So we've met all our targets so far. This was our first target at 18.3. We met it over here. We had our next target here at 21.4. So that was met. But we called for a higher target here at 22,800. And we've met that as well over here. And our next target, and then judging by the 60-day cycle, which is a great framework to be able to work out where the market is going, we know that usually at the bottom of a bear market coming into a bull market or a new bull cycle, we should really make a right translated cycle. And the right translated cycle, as you'll know now, having watched my videos, is when we get past the midpoint and make a higher high from the previous high here. So if we make a new high over here at 25,200, we make a right translated cycle, which seems a natural point for it to come back down into the 60-day cycle low over here. Where that will be at 22.8 or 21.4, only time will tell. And as long as it's higher than this point over here at around 16.5, we'll make a higher high, and then we'll be good to go for the next cycle towards March, April. So my expectation still is that we are going to go into maybe 35, 40 days. That this is the 30-day marker here. We should go into the 35 and maybe 40 days, i.e. 5 to 10 days after this cycle to get us up to about the 25,000 before we have the top out. And this is still extremely bullish simply because while we came up here, we did have a little bit of a correction, but what we're doing here is that we're consolidating at quite a high price level here. And what this tells you is that there's a lot of buyers in the market who are anxious to buy on any little dips here and not allowing the price to come back much further than what it's allowed to do at the moment, around 22,200. And as you can see, since we came up to the 18,300 level here, we've been creating higher highs, and hopefully we'll create another higher high over here and higher lows from over here. You can see quite clearly that the cycle is in an upward trajectory. As I showed on my Twitter page with this green line here, the 200 simple moving average on the weekly chart, we can see quite clearly that this is a line that's going to be extremely important. We got rejected over here, and the chances are, having lost it, we are going to be coming back and retesting it again here. And usually on the first retest, we tend to get rejected. So this would be an appropriate time for a correction to take place. And that also fits in with the timeline of our 60-day cycle. And you only have to look at historically how this is very important, that after a big bear market fall over here, we found support right on this 200 simple moving average on the weekly chart, and here on the COVID situation. And once again, although we fell below it, it did struggle to find support, but once we lost it, we came back and found it as resistance over here. So there is a very good high probability that we will get rejected at this level here. And that level is around about the 24,700. And if you look left here, that coincides with the 25,200. So that range between 24,700 and 25,200 would be a very natural place for Bitcoin to actually have a correction. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.